The world's largest sovereign wealth fund in Norway has moved to Singapore from China. What makes Norway choose Singapore over China? What is Singapore's mojo in attracting foreign investors? We're going to discuss this today. Hi everyone! Today we're going to talk about Norway, one of the richest countries in the world that we don't normally hear about in the media. The world's largest Norwegian sovereign wealth fund, called Norges Bank Investment Management, or NBIM, has packed its bags in China and will move to Singapore. Singapore will be NBIM's investment hub for the Asian region. NBIM said its decision was operational and it would continue to invest in both China and Singapore would be used as its hub for the region. NBIM first opened its Shanghai office in 2007 and 3 years later opened an office in Singapore in 2010. The move into China is to form new business contacts and find new investment opportunities, while Singapore offers new investment opportunities and its proximity to many emerging markets, diverse population, and international business community also provide a valuable recruitment pool for NBIM. Today, the Singapore office has 45 employees, handling all operational functions for the Asian region, including China. Sounds like a win-win situation for the Norwegian Sovereign Wealth Fund to have both offices in China and Singapore. The Singapore office has been operating for the last 14 years alongside the Shanghai office, but NBIM has never considered moving its Shanghai office to Singapore until this year. What happened? Was it because the fund lost money in China? Like many investments, the fund did not perform well in China last year. Its China and Hong Kong portfolio, spread across 850 companies, was reduced by 10.6% to $42 billion last year, from a high of $47 billion 2 years ago. In the first year of this year, NBIM has also reduced its assets in China from 3.8% to 3.4% of its total assets last year, but increased its stakes in other countries like Taiwan and Brazil. Reuters reported that the staff in the Shanghai office reacted angrily to the news. But the losses weren't the main reasons. China could have seen it coming, as tension has been brewing for the last few years. NBIM wasn't happy with Beijing's corporate governance due to the lack of protection of shareholders' rights in China and transparency. Apparently, it has a number of issues, such as disclosure of the introduction of dual-class shares and changes in each class over the reporting period, providing reasons for significant changes in financial statements, publishing specific information on related party transactions and the involvement of large shareholders, and publication of complete English versions of all reports and disclosure. It appears that Beijing pulled up its socks and strengthened shareholders' protection and provided greater transparency. NBIM wrote a letter on 14th of January 2021 praising China's Security Regulatory Commission for these changes. Tension between the two countries escalated again, and Norway was concerned over reports of China's abuse of human rights of Xinjiang Muslim minority, the Uyghurs. The Council of Ethics found that Li-Ning Company Limited, a Chinese sportswear manufacturer company, had signed an agreement with a supplier who operates from the intern camp in Xinjiang and has taken many workers via a government-sponsored employment program targeting ethnic minorities. NBIM excluded Li-Ning over human rights violation upon the recommendation of the Council of Ethics. NBIM nevertheless divested its stakes in Li-Ning from 1.2% to 0.6%, to $168 million at the end of 2021. In January this year, NBIM excluded RV China Industry and Technology due to unacceptable risk posed by selling weapons to Myanmar that constitute serious breaches of the international rules. Human Rights Council reported that the Myanmar people continued to suffer an expanding humanitarian emergency and continuing impunity of the military authorities. Kudos to Norway for standing up for human rights for the Chinese people and the Myanmar people. In March, the Norwegian Central Bank and NBIM banned its employees from using Chinese TikTok after receiving advice from Norway's intelligence agency over security issues. That was the nail in the coffin for the Norwegian investment fund, having a physical presence in China. NBIM moving out of China is all good news for Singapore. NBIM is the world's largest sovereign wealth fund, manages Government Pension Fund Global, or GPFG, with fund size of nearly $1.5 trillion, which is 3 times bigger than Singapore's sovereign wealth fund of $500 billion, held by Temasek Holdings. GPFG revenues is mainly from Norway's petroleum revenues. Norway is the world's 7th largest crude oil producer, with revenue of $57.8 billion. The GPFG is invested outside of Norway, and its investment portfolio consists of 71.3% in listed equities, 26.3% in fixed income bonds, with the rest in real estate and infrastructure. The fund is the largest single owner in the world's stock market, owning almost 1.5% of all shares in the world's listed companies, or around 9,000 companies worldwide. Its investment in China at the end of last year included tech giants like Tencent Holdings, Alibaba Group Holding, liquor distiller Kweichow Moutai, and China Construction Bank. NBIM employs 572 people from 35 countries, with offices in Oslo, London, New York, and Singapore. Norway and Singapore are similar in a number of ways. Norway has a small population of over 5 million people, just like Singapore. These two tiny countries are also the world's richest nations. Norway is the 7th richest nation, with GDP per capita of nearly $79,000, while Singapore is the 3rd richest country at around $128,000. Norway's credit rating has been impressive and is rated the highest possible rating of AAA for the last 34 years since 1989, while Singapore has been rated AAA for the last 21 years, which meant these two countries have the highest degree of creditworthiness with the lowest risk of default. Both countries have accumulated large fiscal surpluses for several decades and have established sovereign wealth funds to invest these surpluses into a diverse range of foreign assets. What is Singapore's mojo, and why do people and companies find Singapore attractive? Singapore has an impressive scorecard when it comes to attracting foreign investment, and it's the best country in the world to invest in, ousting the US, who is the largest economy in the world. This is based on a global survey of 17,000 people conducted by the US News. Singapore's infrastructure allows overseas investors and businesses to conduct their businesses with great ease, and it was ranked 2nd globally, just below Finland, for its efforts in protecting intellectual property, and ranked 5th worldwide on the Corruption Perception Index last year. Singapore is a business gateway to the world, with a strategic location in the heart of Southeast Asia, and its ports is the 2nd busiest in the world. Singapore's proximity to other countries and key markets in the region open up many possibilities for investors and businesses. In fact, many Chinese and Australian producers and trading houses have major offices in Singapore, boasting its position as the region's standout commodities hub. Thanks to its stance on promoting international trade and business, Singapore has an extensive 27 free trade agreements in place, giving investors and businesses based here great access to these important economies. The low tax system in Singapore is appealing for expatriates and investors. Income tax rates for individuals residing in Singapore are progressive in nature and range from 0% to 22%. The low corporate income tax rate of 17% is another attractive factor for investors. There are various tax incentives and grants where businesses can lower their corporate tax rates in Singapore. Singapore is appealing to investors as an offshore wealth management hub, as Singapore's renowned stability, openness to international investment, economic strength, and relatively low tax rate make it a choice destination for investors, and it's ranked 4th globally. The minimum deposit to set up an account can range between $150,000 to $200,000, with low administrative costs and fees. Singapore is home to a world-class education system, which is good news for families. is one of the most popular global destinations for parents considering a well-rounded overseas education for their children. The National University of Singapore is the 19th in global rank, while the Nanyang Technological University is ranked 36 in the world, out of a total of nearly 1,800 universities worldwide. The quality of life in Singapore is also a big pull. The country has a stable and progressive political environment, promising a secure and peaceful life, as well as a strong workforce that's able to offer employment to individuals in multiple industries and sectors. It also boasts a multiracial and multicultural society that embraces diversity and inclusiveness. These qualities resulted in Singapore being the only country in Asia that has received the highest AAA credit rating. Well, my friends, that's all for today. Will Singapore continue to win more foreign investors over China? Share your comments with us. Don't forget to like, subscribe, and share.